Hello, everybody. I'd like to introduce Mark Sabatino, my guest today. Mark is a retired salesman from the biotechnology area, but the biomedical field. He's 66 years old, and the important point about this is he's been investing money for 40 years. I've been investing money for 50 years. So between Mark and I, you've got 90 years of experience, and we're going to be talking about stocks and how we choose stocks and the ways forward and whether stocks are a good idea. So, Mark, over to you. Why stocks?
First of all, greetings to all your viewers, and thanks for having me on, Clive. I've been watching you for a couple years now and enjoyed all of your commentary and analysis. It's helped me greatly. Why stocks? So, as an investor, I started probably in my early 20s, and at that time, there was only mutual funds, index funds, and other funds available at the time. So even if a person wanted to invest in individual stocks at that time, you had to go through a broker who then applied the trades. There wasn't as much technical analysis available back then on individual stocks as well. So a lot of the investing that went on back then was based on the broker's recommendations. Not that there was a lot of information that you could actually read about the companies like there is today. But in a short answer, the reason why I think stocks are a great way, at least a portion of your holdings should be invested in stocks, is that it provides you a tremendous way over a long period of time to benefit from a company's productivity and growth, um, much more than putting it at the bank. As we know, interest rates today are at the lowest they've been in 40 years. And probably over the next couple of years, we're going to see lower interest rates paid to savers, whether that be at the bank or at a mutual fund or bonds. We're going to see lower interest rates because of all the public and private debt that's been created over the last 30 or 40 years. None of it can be serviced at higher rates. It'll cause defaults all over the place. So stocks are exciting. If you do the research and you find good companies that are undervalued, you can invest in them, and your money will grow much greater. And in fact, if you look at over the time period of even say from like 1970 till today, stocks have outpaced savings rates, 5, 6 times what you could get at the bank.
The, the,
Yeah, yeah, and the
the,
idea that your money's safe at the bank, it might be there, but because of the way interest rates are created and controlled, your money is losing value every day as it sits there.
I mean, the great thing about stocks is you've got a board of directors, along with all the senior executives, working their clappers off to do better than putting
Correct.
money in the bank account.
Yeah,
Your money, and they're doing the work.
correct.
It's a great
And they're
formula.
experts. That's all they do is focus on whatever that is that they're in, that business that they're in. And that doesn't take into account, if you have a company with a product or service that's very unique, they have a unique moat around them to protect them from competitors, that their profits are gigantic over a period of time. And we've seen that over and over again in the technology area, right? With companies like Apple and Microsoft and Meta and all these others, and Google and Amazon. They're just some examples of if you had gotten in early and just let your money ride, you would be up, thousands of percent.
So tell me, what tools do you use to find stocks that you would like to buy?
So over a long period of time, I've kind of fine-tuned my strategy, listening to different people. And what I find is that you want to try to find a tool that allows you to analyze the company to see what the true value of the company is. Because you can buy any stock, right, on any given day. But what you want to do is you want to buy stocks that are good stocks over the long term, but are necessarily undervalued. So, and what is the true value of a company? The true value of a company is the future cash flows of that company. And so if the company is not producing cash flows, they're not producing profit, you're taking a high risk by investing in that company because at some point they could go bankrupt. And so I use tools like Seeking Alpha, which is an online service. Anyone can get it. It's not that expensive. And it provides all kinds of analytics. It provides micro and macroeconomic commentary. It has charting, which you can chart any stock 100 different ways. It allows you to compare similar companies that are in the same industry or in different industries across all different platforms to see which stocks are performing well. It allows you to analyze the P/E ratios, their cash flows, on and on and on. I could go on all day long, but it's a wonderful, wonderful tool. It's very easy to use. It integrates news articles. It integrates analysts who follow the stock, and sometimes you'll find there's 15, 20 different analysts that follow a stock and provide a lot of detail on it. It provides quarterly updates, all the earnings reports. And I know for a lot of people, that's probably too much information. But if you're going to take the time to invest your money, you should be knowledgeable about the companies that you're buying and not just do it because everybody else is doing it. You know what I mean?
Now I know that this website actually gives you a forecast or predicted future price. Do you believe
Correct.
that? Do you believe what they tell you when they give you a projected
So,
price?
so what I do is not necessarily, but it's one factor in my analysis. And the cool part is all of the analysts that they have under a particular stock, when you open it up, it'll have their article in there that they wrote. It could have been a year ago, right? And all the predictions that they had, right? So you could go back and look and see, are these people actually nailing it or are they way off? Because a year later, right, the stock price should either be higher or lower, and you get a chance to see what kind of record these people have, and you get a feel for people that are really diving deep into the stock to try to give you the information that you need to be able to make a better decision.
One
So
of the things
I like that part of the website.
One of the things I like to look at, not on the same website, but it's on a different website, is they have an assessment of what the consensus earnings per share is and has been over time.
Correct.
So are the analysts generally reducing their forecasts or are they generally increasing the forecast? And you know how analysts work. They all want to stay in a bunch. So if one increases the forecast, another one might just go a little bit higher, a little bit higher, a little bit higher. They sort of leapfrog each other. But nobody's going to go right up there because
Right.
they want to stay in the box. So if you see a general rising trend, you can assume that generally the analysts are bullish, but they don't want to stick their neck out. Therefore, they're probably being a bit too cautious when you see a rising trend. When you see a
Correct.
falling trend, they're probably
Correct.
being their forecasts are probably going to turn out too high. And 6 months from now, you'll probably find they've
Yes.
downgraded it. So I think the trend in the forecast is a good tool to look at.
Yes. Yes. Absolutely. And so what I do is there's another website that I like, which I think is very good for people that are just learning. It's called Everything Money. This is an American website. And it was put together by this guy who was a business guy and an MBA from the University of Michigan Business School, which is pretty prominent business school. But he's created a really fun website, and he has this thing called the eight pillars, and it breaks down PE ratios, future cash flows, all this other stuff. But he has a lot of other tabs attached to it, so you can go in and you can actually look at over like a 10-year period how this company has been performing, how much cash flows they've had, how they have been able to grow the company, or how much debt do they have to their assets, because that's another big issue. Are they able to pay their debt off if things got bad? And so you start to build kind of a foundation around whether this is like a nice stock to own, right? And what I've done is I put together a list of companies that I want to follow, and I'm just going to grab this here. And I don't know if you, let me see if I can get this thing to.
It won't focus. Oh, maybe
Well,
briefly.
anyway, I have a list of probably right now, I have a list of probably 200 companies that I'm following.
Hmm.
And what I'll do is once I can figure
Your,
out.
your your sound just went down. Did you touch a button?
No. Can you hear me?
Maybe it's my end. I'll turn it up. Okay, go
Can
on.
you hear me
Carry on.
now?
Yeah, I'm
Okay.
fine.
So once I developed that list, I look at the factors that we've been talking about to try to figure out what's the true value of this company today, not 5 years from now, not a month ago. And is it possible to buy that stock in a range that is undervalued? And Seeking Alpha allows you to create alerts for any stocks. So I can go in there and put a price in or multiple prices that it'll alert me when it hits that price, whether it's high or low. And it sends me a text message or an email immediately. And then I can go and look and decide, okay, is this the right time to buy the stock? And sometimes it isn't, sometimes it isn't, but it's a really nice feature because there's so many. I mean, you couldn't keep track of all this if you didn't have some kind of alert system. And the
In,
alert
in,
system lets me know that. And then I can just go and if like just recently, I purchased a couple stocks that were down 50% from a year ago. And one of them was down below its 5 year low. And it's a really good company, really, really good company. And I know it's going to come back and it's going to do really well. But those kinds of opportunities, you have to be alerted or you're just going to miss them, you know?
yeah, I mean, the funny thing is, if you ask different people, or you've read many books as well, what their strategy is for picking a good stock. Everybody's got their pet theory. You buy companies with low price selling ratio. Next person will say, I always look at the cash flow to price. Next one will say, I looked at price to sales. Next one says, I'm looking at the growth. Next one says, I'm looking for price to low price to book. Or next one says, I'm looking for the stocks which are going up high momentum. And there's all these theories out there. And at times, some of them are working and some of them not. Then it changes around. But I don't think one can stick to any one strategy
Correct.
on its own. And it
No,
sounds like you're looking at all of these things. But when you find a company which is uh, a very undervalued company on one metric, it might not be so great on another metric. So you
correct.
might find it's undervalued on price earnings ratio, but then you go to look at the cash flow and it's negative cash flow. That's not so great. Or you look
Right.
at the debt to equity ratio. They got this huge debt, which if their cash flow or their business dries up a bit, they'll have problems paying it. So these are all things to look at individually, but to find the perfect company where everything's aligned is very hard, isn't it?
Yeah, but that's what people like Ray Dalio and Warren Buffett have done for 40 years, you know? And so, if you put them up against a lot of other people, they have consistently, maybe they haven't, hit, grand slams, but they're hitting singles and doubles and triples like consistently because they're patient. You have to be patient. And that's a lot of people aren't patient. They want to jump on whatever is popular at the moment. And that's partly what drives the price of the stock up. And then when the company is not performing well, then that's when the stock corrects. And if you
Yeah.
look on pretty much any chart of a stock, it always comes back to its mean at some point, over a period of, years. So if you're patient and there's something you're really interested in owning, you can buy it.
You know, one of the
Someone,
biggest mistakes people make is they get really excited about a stock at the same time as everybody else is excited about it. And
yep,
the mistake they make is because they're excited about it, they take the maximum amount of money they would like to put in a stock and say, I can't put any less than that because that would be silly. I'd miss out on the gains which are about to come. So they'll put if their allocation is 3% or whatever it is, they'll put the
yep,
whole 3% on one day. And, it's sod's law, but I know from my experience over 50 years that every time I buy something, it's guaranteed almost to go down the next day. And if I sell it, it's almost guaranteed to go up the next day. So the one thing I never, ever do is put all my investment in one day. I usually buy my normal way of doing it is say I'll put if it's a 3% holding, and I actually have a lot less than that, but I will buy one third of what I finally intend to buy,
I
and then I'll
understand.
forget. Then I'll forget about it for a while. I might come back a week later, or a month later, or 6 months later. But at least I've got that powder dry, and I'm not fretting that it went down the next day. And if it does go down the next day, well, maybe I'll be able to buy it even cheaper next week.
Correct. Correct. I mean, I think for me, it's about, is it the right company? Is it a good company? Is it telling the right story and is it following through on its commitments? because over time, it's gonna perform for you. But if like you said, if I'm not a day trader, and but I do have a philosophy about if something drops, 20%, I reassess myself, if it drops 7 or 8%, that's not a big deal. You know what I mean? But if it drops, 30 or 40 or 50% and the story isn't very good, you know, it's time to get out, and you're gonna have some losses along the way. And that's to your point. That's why you don't put 50% in. You put two or 3 or 4% of your holdings in, and then you build your positions from there, you know.
Absolutely. I mean, the world is a funny place, and you never know what news is going to come. So even if a stock is as exciting as anything, you don't know if tomorrow there's going to be an SEC investigation which will knock 20 or 30% off the price in no time at all. These things seem to happen just at the worst possible time. But as I say, if you only put a small part of what you intend to put in, like in my case, I deliberately choose a third. Some people could choose a different number. If that happens, then you can reassess the situation and say, is this important? Is it meaningful? Should I be getting out? And if I get out, I'm only losing a loss on a third, so it's not a big
Right,
loss.
right.
But if that loss was caused by some extraneous factor, like let's say the chairman died, which probably shouldn't change anything,
No.
uh, except of course his family might have to sell the shares to pay the death duties.
Yes.
But if that doesn't change the fortunes of the company in general, then that might be an opportunity to say how lucky I am I can buy some more at a cheap price.
Yes, exactly. And that's what I'm saying. If you have to evaluate the company, and if you deeply believe, because of all the analysis that you've done, that it is a good company, right? Things happen along the way. To your point, those are opportunities to buy more shares at a lower price. I've just did that a couple times in the last 2 or 3 months, where I got what I think is a really great company at an unbelievably low price. And now I'm just going to wait. And I know a year from now, 2 years from now, it's going to be up 30, 40, 50%. And probably it'll continue to do that because it has done that over the last 20 or 30 years, because these are companies that have been around, they're not brand new companies. But to your point, and to go back to when we started, what's my philosophy? My philosophy is everybody's in a different place in their life at a different time, right? When you're 20 years old, your goals are different than when you're 50 years old or when you're 60 years old. When you really want to try to conserve and protect your wealth, you can take more chances when you're 20 and 25 because you got more years until you retire. And if you make a mistake, you have time to make it up. But if you've accumulated a decent amount of wealth and you start putting a lot of it at risk at age 50 and 60, you might not have enough time to make up for the mistakes. And so that's why I'm a lot more detail oriented now than I was when I was 25. I was more like
Yeah,
you.
that's it.
Yeah, I was just on that side.
I have a little rule of thumb. I didn't have this when I was young because I didn't know it, but it's a rule of thumb I tell people. Now, they say, how many investments should I own? I say, take your age, knock off 20. That is how many investments you should own. So if you're 21, it's fine. Put everything you own, provided you've not inherited it, you've earned it,
Right,
put everything you own into the hottest stock that you believe in.
right,
If you're 25, split that into four or five, and you have 20% each stock. And if you're 30, you're now at 10 stocks. And if you're at 60, you're at 40, you're going to be at 40 stocks and so on.
right. Exactly. Great, great, great advice.
And that's diversity. Now, you were talking about the tools you used, and I've used that tool before. I was one of the subscribers. I kind of gave it up because I moved on to another one, not because it was better, but I didn't know about all the features you've just described to me, and I wish I had known about it. I kind of paid for it a while, then I thought it's not doing it for me. I'm using a couple which are paid applications, but they also have free versions. One I love a lot, which is for more sophisticated investors, called Market Screener.
Okay.
That's got sounds like it's got all the information that you mentioned in Seeking Alpha, and the other one I use is Simply Wall Street. It's not it's spelled Simply Wall in one word, then
Okay.
.st is the domain name, simplywall.st. That one I like because it's a really fast way to see if you want to spend more time looking at a company because they have what's called a snowflake, but it's like a blob and it's got forks like how is it a value investment? Is it a dividend investment? Is it a growth investment? Is it a safety investment? All kinds of features. Uh,
Interesting.
so the greener the blob, the further out the blob is, the greener it gets
Okay.
at different spikes. And if you can
Okay.
find a perfectly green blob which is filling the whole of the snowflake, you found the perfect company. That doesn't exist, by the way.
Right.
But if you could, it's great.
Yeah,
But at
clearly.
least if you're in the mood for looking for safe companies, I'm looking for companies where the spike is a long way out on the safety end. If I'm looking for
Yes.
growth company, I'm looking for where the spike is a long way out on the growth. If I'm looking for safety and growth, I'm looking for both. And I might be looking for value as well. So I'm looking for a spike on the value. But obviously, the more spikes you look for, the less companies you're going to find.
Right. Yeah, that's very cool. I'm going to check those out. Yeah, I think we're living in really interesting times. And with AI, by the way, Seeking Alpha utilizes AI. So on most of the stocks, but not all of them, they have an AI feature you can click on, and it goes into some incredible detail about the company using AI technology. That's all part of the subscription, and I couldn't possibly get that if I was running to 10 different sites. You know what I mean? So I was looking for something that was integrated. I mean, I've used Vanguard because they're big in the United States. And that was the only thing that was really available in the 80s and 90s. Those kind of companies, Fidelity and Charles Schwab and Vanguard, they do offer an online brokerage, but it's very wonky. It's not user friendly, and it doesn't provide any of this kind of stuff at all. And I think they're missing out, but they kind of have their philosophy of how they want investors to invest with them. They really want you to put all your money in mutual funds and ETFs. So
You
they're not
you
going
know,
to offer a lot of that.
there's been an amazing thing happened in the last 5 or 6 years. And it's this. All my career, I was working in banks, and we had these wonderful tools like Reuters, Bloomberg, Value Line, S&P, all tools to analyze stocks. But now, the man in the street, like you and I, can get tools which cost a fraction of the price, and in
Yes,
some cases are totally free, which have
yes,
more features and more bells and whistles than those really expensive tools that the banks
exactly.
and financial institutions are still paying for, which cost thousands of dollars a month.
Yeah.
So we
I
have the
have been,
advantage now. We're ahead
yeah.
of the professional
Yes,
investors.
it's really exciting for me because I, like you, even though I wasn't a professional investor like you, I was been my hobby for a long time, so I've always been in it. And these are the kind of things that I've yearned for a long time, for probably 30 years. I've told my wife, why can't we have these tools? Like, why do these guys just have it? And all of a sudden, between all the new hardware technology, software technology, online technology, AI, these companies like Seeking Alpha, and I'm just using them as one example. I'm sure there's others, they have been able to integrate this thing. I'm still learning. I've been using it for almost a year, and I'm still learning how to use it. Like it's very exciting because I play with different parts of it, and there's so much information that it's almost overwhelming. But they're trying to democratize it and make it easy for people to understand and navigate, jump around. And the more you use it, the more you like it.
I'm using about 13 different AIs in different ways, and ultimate goal for most of them is it's going to be end up in investments in some way.
Right.
But there's some which are better or worse. One which I like for investments is called Grok. I don't know if you've heard of that. That's Elon
I did
Musk's
hear of it, but I
AI.
haven't been on it yet.
So Grok is great for investments.
Is
Um,
it GROCK or
and
What do you call it?
it's GROK.
GROK.
So
Okay.
just as an illustration of one thing I did, I've done many things with it. I took a bunch of gold mining stocks and asked it to project for me what the price earnings ratio will be next year, the year after, the year after that, based on a variety of scenarios for the gold price. So what if the gold price averages 2,800, 3,000, 3,300, 3,500, 4,000? Now tell me, for each of these companies, all the way out to 2030, which is further than the analysts go,
Right.
what the price sales ratio. And I want you to assume that the gold will be. We're talking about the selling price that they're going to sell the gold, average
Right.
selling price of the gold, and also you can assume that the costs rise by 10% a year in doing your calculation. So you take the costs, rise them 10%, you take the earnings, and also you have to take into account what the company is saying about future changes in how much it's going to mine. If it's bought a business and it's going to mine more next year, we have to take that into account. And
Right.
by factoring all that in, it can crunch numbers in almost no time at all and come out with not only just the price earnings ratio, but that was one of the factors, but the whole works and how it did the calculation. And it's not just Grok which can do it, but there are others which can even do a better job, but they get more expensive. Um,
Right.
Grok's free, by the way.
Okay. Awesome.
One which is expensive, which perhaps is even better, is called Manus AI. It's a Chinese AI, but that's probably the most expensive in terms of it's about $39 a month,
Okay.
and for that one, the downside is when it does its research, it can clunk away for 20 minutes. It's not like ChatGPT, which churns out an
Right.
answer within seconds.
Yeah,
It
because
can,
it's really going deep into the databases and going
yeah.
and interrogating everything to get the best
But
answer.
but I absolutely on any kind of very very deep research where I have to go to, or where a human would have to go to tens or hundreds of websites to get information. That one is doing the work of a human, going to all these websites, looking left, right, and center, and you see what it's doing. Something, "Oh, I can't get in this website because they've got a firewall," and then it goes somewhere else, and it's
Right.
pulling the information, and you can see it working, but it will take a long time to get your result. But when you get a result, it's going to be pretty detailed and long, but so you only want to do it if you need that kind of study.
Right. I have a question for you. So when you ran those numbers on the mining companies, were you surprised with what you saw or
Um, it was sort of what I expected, but what I can tell you is a lot of the gold mining companies, even though the price has gone up this year, next year their multiples in many cases will be below 10 times. So in a year's time from now, in many companies, we'd be looking at P ratios of below 10 with what seems to the robots out there like high growth because the sales will have gone up and the earnings will have gone up. Of course, the costs will have gone up a bit too, but they won't have gone up nearly as much as the gold price has gone up.
right?
So we all know that if you have a gold mining company, the cost of production is say 1,500, and they were selling their gold for 2,000, they had a $500 profit. Now, if the gold price goes up by 50% to 3,000, instead of making $500 profit, they're making $1,500 profit. So their profit is three times what it was for a
Right.
50% rise in the gold price.
Right.
So there's that leveraged effect. And of course, we've had this huge leveraged effect. And touched on this a bit about with the analysts and the old reports. Most analysts only bring out the reports shortly after or at the time of the last results announcement.
Right.
So for most of these gold mining companies, if you read the last report, that's a projection which was made months ago, sometimes a long time ago, when the gold price was lower. And of course, even at that point, the analyst was never going to be too adventurous.
No.
But the beauty of the AI tools is it will crunch the numbers the way it should be crunched by the analysts who don't dare to
Right.
be adventurous. They don't dare to stick their neck
Exactly.
out. And then you can find that there are bargains of a lifetime in certain areas.
Yeah, I mean, I've been investing in miners for probably, I ventured probably the first time about 10 or 12 years ago, and I had some success um, because I pretty much stayed with the large producers. I didn't venture into the junior miners or the explorers at that time. But since like 2021, I've played the field and I have a little bit in each, and it's exciting once you start to understand mining in general and the fact that you're talking about real assets here, um, not financialized paper derivatives. And as we move through this currency reset, these kinds of assets that are being produced at a low cost those companies are going to be rewarded greatly, I think, to your point. And
Now, you
you
mentioned the
can
word
pick
currency
those.
reset. Everyone's hearing the word currency reset left, right, and center, and most people don't know what it means. What does it mean to you?
Well, what it means to me is that the debt-based system in the United States, which obviously has an effect across the world because all countries use fiat currency, paper currencies, digital currencies to operate their economies. is coming to an end as we know it because of they basically pushed it as far as they can. And in any debt-based system, it has to continue to expand. And as it expands, if it doesn't expand appropriately, you have you have distortions, right? And the big distortion is the value of the money that you're earning every day at your job becomes worth less because of the way that the central banking system is controlling the money supply. And so the bottom line is, all you have to do is look at, and I'm going to use the dollar because that's where I live in the United States, but you can use any currencies. Um, the dollar has lost about 97% of its value since 1972, since we went into the Bretton Woods system. And so what your mom and dad or grandparents could buy in 1972, it costs you 97% more to buy that. Okay. And most people's jobs and incomes are not keeping up with that, right? So at some point we have to switch to something different. And it's quite obvious to me, and I believe this for a long, long time, that the central banks are accumulating gold at unbelievable amounts that we've never seen before, not because it's just a pet rock, right? It's because they know that it's the only way that they can create credibility around whatever's coming next. And does that mean that we're going to see 100% backing of fiat currencies with gold? No, but it's going to be probably part of a basket of things that will back up currencies in the future. And if that wasn't the case, we wouldn't see millions of tons of gold being purchased. Uh, like it's ridiculous, right? And we're starting to see the vaults and the LBMA and the COMEX being raided because people are asking for physical delivery now. They don't just want the contract. And so there's a movement, and it's almost impossible for them to cover it up anymore now. I mean, the data is out there for anyone to see if they want. And at the end of this, um, if you're someone who has too much debt, you haven't managed your finances properly, you're probably going to have a rough time getting through this reset, whatever it looks like, whether they force CBDCs on people and use that as a way to control people's spending and the way you use your money and also control the value of the money or some other version of that. I think that it's important to get your house in order, and I tell that to people, and it's not that hard. You just have to you have to look at the world differently because the world is different and it's changing as we speak, and you have to keep your debts low, and you need to accumulate a little bit of gold and silver on the side, physical, um, whether you want to hold it yourself or you want to put it in a private vault, whatever, but not paper contracts because at some point those people with those paper contracts are going to have nothing and they don't know it yet, but that's coming. Um, and then diversification, right? You need to
Yeah,
own it.
I think whatever you do, everyone should have some gold and silver coins where they can get their hands on it in a safe place, but where they can get their hands on it quickly and easily if
Yes,
they need to.
yes,
And if we do go into a reset and you own some gold coins before, you'll still own them afterwards. So we don't know what form that reset would take, but you touched on CBDCs, and CBDCs might well be the central bank digital currencies might well be part of the reset. And the way that might work is they might limit how much of your existing dollars you could convert into the new CBDC dollar at 1 to 1. In other words, yes, you could have 10,000, 20,000, whatever the number happens to be.
right.
Yes, you could convert under certain circumstances, but if your motive is to speculate against the dollar or cause disruption in the financial marketplaces or do something that isn't so great, the answer is no. Or if we're in a financial crisis at the moment, we don't want people loading up their CBDC wallets, which is the only thing you can spend in the shops, because those people who've got too much CBDCs will be emptying the shelves. So we think that $300 is enough for everyone every day, and that should be, at least with that we can keep the shop sell shelves stacked.
Yes.
But the other possibility is that would be a controlled changeover. But what if we go into a panic changeover. There's a sudden loss of confidence in global currencies, and they have to do something to restore confidence. Then it's got to be something to do with gold. But if they bring in a gold-backed currency, as that happens, nobody will be allowed to change all their money into the gold-backed currency. You'll be told, just like I said with the CBD, you can change 1,000 or 5,000 or 10,000 or whatever the figure happens to be.
Right.
No, no more.
Right.
So now we're operating the economy on this new gold-backed currency. You can have confidence that what just happened, the crisis, the crash, will never happen again. And when it's all gone one day, perhaps we'll let you change the rest, which is obviously a temporary restriction, which will never be lifted. And that way, we'll have the national debt in a defunct currency, which means the government in the gold-backed currencies is starting from a debt to GDP ratio of zero.
Yep.
So they can
Yep.
go and borrow like hell once
Yep.
again.
Yep. It all starts over again. But to your point, if you don't own it, if you don't physically possess it, then you don't own anything. And so, I saw this happening in the 80s, and I started buying silver in the 80s, when nobody was buying silver. I still own coins that I purchased in the 80s that I paid, $1.25 for.
Wow, that's a bargain. Now, tell me, talking about the getting from one side of the currency reset to the other intact with your wealth. I get a question, and it's often asked to me: if I buy shares, we have a currency reset, they're all going to be worthless, aren't they? Because they're in the old currency. That's what people say, but that's not what I think. What do you think?
No, I mean, how could any central bank bring us through to the other side where all these companies that are worth trillions and trillions of dollars are worth nothing? I mean, you would have no economy, you would have no country, you would have no society,
Exactly.
right? So
You,
there has to
you,
be a way to apply value to
yeah.
whatever we come through on the other side. And so
The,
again, it comes back to what you were saying about evaluating the companies. If the company is providing a valuable service or product, it's going to be doing the same thing on the other side.
Yeah,
So,
it will still
yeah,
own real estate. It will still have a goodwill in the form of its brand
yeah,
name. It will still have customers who want to buy its products.
absolutely.
And you
Absolutely.
you as the investor in the company will still own a slice of a business. And because that slice of a business just survived a currency reset, everybody's going to want to say, gosh, I wish I'd owned it before. I better own it afterwards in case we have another one.
Right. Exactly. In fact, the better companies are going to probably do way better. The undervalued, companies are going to do really well in that situation because they're probably providing a very valuable product or service that everybody needs. And to your point, we have lived through how many crashes, and including the internet crash in the late 90s. And you think about the companies that were supposed to be these great companies, right? And they disappeared like overnight.
Yeah.
And other companies replaced them that are now. Amazon was a nothing back then.
Apple too was bankrupt, and
Right.
they had to be. The
Right.
Apple was saved by Microsoft,
Yes.
or actually by Bill Gates, I believe,
Yeah.
who literally saw it to be in the interest of Microsoft to keep one of their competitors alive, so they didn't
Yep.
have such a monopoly.
Yep. Yeah, I mean, it's very exciting and interesting times that we're living in, and don't let fear drive your decisions. And I think that's the other overwhelming thing that people need to think about is that the governments around the world have used fear and intimidation to scare people into decisions that are not good for them. You just got to
Just
calm yourself down and step back from the malaise and look at the big picture and look, we're going to get through this. Civilization's been around a long time. We're just repeating the same thing over and over again. There's more technology today, but we're making the same stupid mistakes. I'm talking about governments.
if
And
we, if we go into a reset, we could judge how people might behave from what happened in 1933. Uh, before they asked everybody to turn in their gold, this was about 2 months before, in February or a month before, they had to close the banks. So they closed the banks for 2 weeks. It was a bank holiday because people were lining up trying to get their money out of the banks. And obviously, the story was that when the banks reopen, they'll have sorted the wheat from the chaff. And if the bank opens its doors ever again, it's going to be a safe bank. And if it doesn't, bad luck. But what actually happened? That people knew. that this recall of the gold was likely to come. So what happened? On the day they opened the banks again, the stock market had its biggest one-day rise in all of history. Never been repeated since. It went up about 13.7% on that day.
Wow.
And over the next few months, proceeded to rise a total of 100%. Why? Because that was after, so they then closed the gold window and said, hand in your gold. So people said, oh my God, I can't have gold. And they rushed into something else which would preserve its value. And that they sort of stopped. Of course, it didn't really work out in the long run because then we were in the Great Depression and stocks
Right.
went down again.
Right. You
But
didn't, right. People don't hear about that, but you're right.
but that was the
Very
psychology of
interesting.
it. Get into stocks because I can't buy gold.
Right. Well, the other interesting thing is, I had grandparents that lived through that. Um, this idea that, at least in America, that all Americans all handed their gold over to the country, to the government. Is just a lie. The smart people just, hid it in their houses and places and waited for years later, you know what I mean? And then gave it to their kids and their grandkids. And because they knew it was real money and they weren't going to give it to the government. And they were right? Because the day after FDR confiscated whatever gold he was going to get, he raised the price up. So people lost the value if they had handed that money, handed their gold over to the government. They
There
just
was
waited 20 or 30 or 40 years, right? And then or they used it for barter or whatever else. Nobody could stop them from doing that. It's going to create black markets.
there was a great scam. It wasn't really a scam, but it's a scheme going on
Yeah,
with the jewelers after they'd taken in the gold because the Federal Reserve was willing, or the U.S. Mint was willing to pay $35 an ounce for an ounce of gold, but the $20 coins, the double eagles, were roughly an ounce, was still face value $20. So people have been hoarding these, had a $20 coin, which if you melted it down was worth approximately 35. But the man in the street couldn't melt it down because he wasn't allowed to have it. But from time to time, people would do a deal with a jeweler. And then when the jeweler is melting down people's jewelry, to have it paid out by the US Mint, he'd slip in some of the gold coins and then turn over the bars to the US Mint to get the money at $35 an ounce. But of course, everyone must have known this was going on because quite often the gold being turned into the mint was purer than one would expect from 18 karat gold.
right. That's interesting.
And so these jewelers seem to have a lot of people handing in pure gold bracelets,
Yeah,
which weren't very common because then you don't wear a 24 karat bracelet because it's too
yeah.
soft. And there was one guy, his name was Israel Swit. He was a jeweler, and he got caught at a railway station lugging a great big suitcase with hundreds of these gold coins. And the theory was that he was taking them to be melted down, but of course he was only he wasn't allowed to have all these gold coins, and this was after they called them in. Uh, but a funny thing happened with him. The FBI discovered that some of the 1933 double eagles, which had been minted but never released to the public by the mint,
Right,
about 5 years later, the late 30s or early 40s, they discovered some of them, one of them was being auctioned
right.
because someone wrote to the mint and said, this one's going up in an auction sale. Can you just tell me how many were minted? And they looked, well, none ever left the mint. Yet there's one going in an auction sale. So they went to investigate it, traced it back to this guy, Israel Swit, the jeweler. And somehow they managed to find that there were dozens of these coins out there by various means. And the Secret Service went on a hunt for them. And this hunt took 70 years and cost the
Wow.
Secret Service many millions of dollars in costs to hunt
Right.
down these coins. But they over a while, over 5 or 6 years or 7 years, they collected most of them in. But there was one which had got out on the loose, was still on the loose as far as they knew. And that had been bought by the king of Egypt.
Wow.
So he had come to, or he or his right hand man had come to America, seen the coin at a dealer's, bought it, and as it was illegal to export, he'd quite rightly applied for an export license from the US Mint, who failed to realize that
He had that
because,
coin.
because he'd paid a lot of money for it, like
Right,
$500 or something.
right,
They thought, oh, it must be a rare coin, so you're allowed to
right.
have rare coins. So they gave it an export license. It went off to Egypt. Of course, many years later, this gold coin, well, the Americans wrote and wanted it back, but he wasn't giving it back. But many years later, he was deposed, and the Egyptian government put the coins into an auction sale run by Sotheby's in Cairo. The American government got to hear of it, and they wrote to the Egyptian government, said, we're friends with you, aren't we? Give us our coin
Right,
back.
right.
So the Egyptian government withdrew the coin from the auction and didn't reply to the Americans' letters. They kept writing through diplomatic channels, but they just ignored it. Anyway, decades later, I think it was in the late 1990s, an Egyptian coin dealer was selling a batch of coins to a London dealer, and one of these coins was the missing 1933 double eagle, and there was no knowledge in anybody's minds that this was a coin which shouldn't have escaped from the mint. So,
Right.
in good faith, the London dealer bought this coin and then tried to tout it around to market it because people wanted missing years. And someone in America, a dealer, got to hear it and reported it to the Secret Service. So the Secret Service decided to set up a sting. So they enticed the London coin dealer, who's a very reputable person, enticed him to New York. He came to the Waldorf Hotel with a friend to sell the coin, and then they arrested him, threw him in handcuffs, chucked him into jail, and was threatening all kinds of charges. So he immediately got a lawyer, and the lawyer, after a while, persuaded them that he couldn't be charged if he didn't know it was stolen or purloined. Of course, the
Right,
funny thing was the mint was never this coin was never missing from the mint. That was the weird thing. The mint
right.
was missing no gold. They had every gram accounted for, so it wasn't missing. So that was the weird thing. Anyway, long and short of it was, they he was released, and then he went to court through this lawyer to try and get his coin back. And it took about 10 years of backwards and forwards. And finally, he struck a deal with the Secret Service that they would sell the coin and split the proceeds 50-50 with the US government. You know how much it sold for? $7.5 million in auction.
Wow. And
Anyway,
the government probably, the US government probably spent three times that chasing after it for all those years.
anyway, the story doesn't stop there. Oh, by the way, when this deal was done, the U.S. government then demanded their $20 on top because it was a $20 coin. so,
Of course.
so they had to pay half of 7.5 million plus the $20.
That
But
sounds
anyway,
like the government.
by the by, the story didn't stop. Some years after this auction sale, the daughter, who was a very elderly woman in her 80s or 90s, of Israel Swit, the same person who was found with all these gold coins back in the 1930s,
Yes.
was looking through his safety deposit box, a safety deposit box which she had visited many, many times over the years, and she accidentally saw some little envelopes in them. And I don't know what happened, but she called her son. They took them back to the jewelry shop because they were still in the jewelry business, opened them up, and there were 10 of these 1933 double eagles.
Wow.
So what did they do? They called up the same lawyer who defended the London coin dealer and said, "What do we do?" And he said, "The best thing is negotiate with the government so you can sell them and get half the proceeds." So the lawyer wrote to the U.S. Mint and said, "Look, on a no commitment basis, would you be able to verify these coins? But they still belong to the people who found them in the safe deposit, give them back and all this." And the US Mint wrote back and said, "No problem. We'll come and inspect them for you." So they came along to the safety deposit box and arrived with the Secret Service, who promptly read the Miranda rights to the family and seized the coins.
That's so typical.
Another
That's why people hide their coins.
another 10 years. So exactly, there's another 10 years of wrangling in the courts. And finally, the family were refused appeal to the highest court in the land of the USA. So they lost their coins and their legal fee, I'm afraid, for them, I suppose. But the coin which had been sold for 7.5 million, then resold, that was the only one known to be in existence.
Right.
$27 million for a $20 coin.
Who owns it now?
I think the buyer is known and it's legally owned because the US
Right.
government have given permission for it. But of course, the rumor is there are many more of these 1933 double eagles out there, but
I
whoever's
bet there
got
are.
them is keeping
Yeah.
stum.
Oh yeah, they're not going to say anything. Leave another couple more decades before they say anything to anybody, if they ever say anything to anybody.
But the weirdest thing is these coins are out there when the US Mint says we never released them and we never lost a gram of gold.
Oh, geez. That's typical. That's
So,
typical.
and all that was very, very cleverly and carefully audited.
Yes, I'm sure.
Um, so let's go on. What sort of stocks do you like to buy? You said cheap stocks. I mean, what's your definition of cheap or value or value?
So if you if you look at the future cash flows and the P's and all those other factors, you'll come up with a price that is a fair price. And so I'm not afraid to pay that fair price or even higher if I know I'm going to get growth. But if I can get it below that, I'll just wait, you know what I mean? And I'll look at the chart. And if I see, you'll see a movement of the chart over a long period of time, you can see where it keeps coming back down to a certain average price, right? And I just wait, and if you're doing this all the time, there's always a stock that's popping up somewhere along the way. I don't have to make all my investments in 1 month or 2 months or 3 months. So I've always got cash on the side that I can move quickly to purchase a stock that I'm interested in. But to be more specific to you, areas that I'm interested in um, are the mining sector, whether that's gold, silver, uranium, in particular, copper. I look for growth, or should I say, income stocks, things that will have dividends. You and I've talked about this before. Over 4%, 4 to 7% that are consistent, and they've been doing it for a long period of time. That also have, a component of growth in them as well. So you're getting paid while it's actually growing. And that could be in any sector, really. You have to just analyze the companies and see who pays those. Um, I also let me just run through here real quick for you. So semiconductors and computer area internet is something that I really like, and I follow closely. All the names that you might know, and then lots of other names that you probably a lot of people don't know. Um, Industrial companies, insurance companies, financial companies, energy stocks for sure. An area right now that I really love, that I think is highly undervalued, are the natural gas transport companies and storage companies. Um, they pay unbelievable dividends. And with what's going on around the world right now with energy and the realization that renewables by themselves are not going to be able to provide the amount of energy that's necessary to run these gigantic AI data centers, and just the normal growth that we're seeing in emerging economies and other economies. Natural gas is has very low, puts out very low carbon footprint. It's easy, it's abundant, and the transport companies, because this stuff is being moved long distances, they're just printing money. It's just unbelievable, and they're still undervalued. And there's a ton of them, So there's a lot of those that I like. I like coal.
Mhm.
Everybody else hates coal. I like coal. There's some
Very,
really good
very
coal
undervalued at the
companies.
moment, obviously, for
Yeah,
good
there's
obvious
some good
reasons.
coal companies. Yeah, utility companies. There's a lot of ways to play the utilities around the world. Nuclear, love nuclear. We're not even close to seeing the kind of growth we're going to see in nuclear over the next, 20, 40, 50 years. Consumer staples and consumer discretionary. There's some good picks in there. There's been a lot of devastation there, obviously, over the last couple of years because of everything that's happened. But there are some good picks in there. And then I do have a little bit of money in treasuries, short term treasuries only, and money markets. The other things I like are internationally. I'm looking at certain emerging markets that look like they can do really well, have been doing well, and nobody's really paying attention. American investors aren't paying attention at all, and so Spain I think, has the highest GDP growth in Europe.
Hmm.
Doesn't seem like there's anything that's going to stop that from happening right now. Um, Argentina, I'm keeping my eye on China right now. I think their stocks may be still a little bit expensive, but I think there'll be some opportunities to buy in China and in Asia. And then medical. Since I spent most of my years in medical, I know there's a lot of good opportunities
And
there. And
that's a very undervalued sector at the moment.
yeah,
The
yes,
especially
yeah,
the
yeah,
biotech and the pharmaceutical
yes,
sector.
yes. You had some really great picks on that list that you put together, and I've done some additional analysis of
Yeah.
some of those companies
I mean,
already.
as an example, I'm focusing, not focusing on, I don't focus on anything, but what's consuming some of my time at the moment is I'm looking at the companies which will be the natural beneficiaries of AI. In other words, they're not producing AI, but they are earlier adopters of it, and they're saying so, and they have demonstrable results to prove that. I mean, one company I put on my list was Novo Nordisk. They have said that they used to spend 30 weeks producing a clinical report, and it used to take 50 staff on that team. And they can now do that in 10 minutes, and they only need three people on the team to produce the
Wow.
clinical reports. And they say every day they save on a clinical report, or every day they get a medicine to the market earlier than before, is $15 million a day. So can you imagine for a few tens of dollars, hundreds of dollars a year? Obviously, they have to have the programmers, but for a few
Right,
hundreds of dollars a year in AI,
right.
they're increasing on every product they get to the market $15 million extra every day. And this is a sort of savings that many companies will make. Now, obviously, it's terrible on the human race because we're all going to lose our jobs.
Right.
But the problem here is if one company says, well, no, I'm going to keep all my staff because that's the humane thing to do, and companies should say that, their competitors going to get the AI, and then they won't exist, and then
They're all gonna jump on board. They have to.
they have to.
There's no
There's no
choice, right?
choice.
Yeah, there's no choice. So that's a great example, and there's lots of other ones out there like that as well. Like you said, in the financial, like Progressive Insurance in the United States, they were using some of these models even 5, 6, 7, 8 years ago. And if you look at them on a chart next to all the other insurance companies, property and casual, they're like far and above outperforming everybody in the sector because they adopted it early, right? And they figured it out and they got an algorithm now and they're running with it. You know what I mean? So now everyone has to catch up to them. So
So
those are the kind of things.
I've been
Yeah.
looking at the insurance companies too. I mean, I like companies like that because they've got huge numbers of people sitting behind desks,
Yep.
and not all those people will be needed next
Nope.
year. But
Nope.
but two, I won't say the names, but there's a couple which stood out because they had written in their latest report that how they're processing motor claims. And basically, the end user takes a picture of the damage, and artificial intelligence analyzes what the payout is going to be. One was a Chinese company, one was a German company. I'm quite sure there's plenty more doing that, but it just shows you. They say it's taken the average time for a claim down from several hours to a few
Yeah.
minutes.
Yeah. Yep. Yeah. And I know, these claim adjusters are all going to lose their jobs. These people that they send out,
Yeah.
right? I mean, think about the cost. You're paying them a salary. You buy them, they have cars that they drive, right? So they got to pay for the car, the insurance for the car, gas for the car, maintenance for the car. All that disappears.
I mean, I was speaking with a friend yesterday, and she was explaining that she's been in dispute with her insurance company for months and months. But every time she writes to them as part of the dispute, the letter comes back, and she's quite sure it hasn't been written by a human.
Right. It's so well
But
written. It's so well written.
yeah, it's it's referring to the general terms and conditions and small print and legal
Yes.
clause here, legal
Yes.
clause.
Yeah.
It's all saying why we can't
Yeah.
pay you.
Yeah.
But she's like, all I want to do is speak to a human, but you can't
Yeah.
get to the humans anymore.
No. No. And all those lawyers are going to lose their jobs too.
Well, that's funny you should say that. I was sent a contract on something the other day, and I thought, well, why would I pass it by a lawyer? I shoved it in ChatGPT or one of these things, and it came back with the suggested alterations. Sent it back to the people who sent it to me with the alterations. Said, that's fine, we're done, because they did the same thing at their end.
Yeah. Unbelievable. Yeah.
Why
And
why do I
it's
need a lawyer anymore?
no, you don't. Nope. So it's exciting. The other areas, when I talk about finance, that's a broad term, right? So we're talking about credit card companies, talking about banks, we're talking about multi tiered insurance companies that, property casualty, health, life. Um, we're talking about other kinds of finance. There's a lot of opportunity there. You just got to, pick and choose correctly. Um, so
One
yeah, I
thing I
mean,
like to buy is you'll probably know the term as you're a sophisticated investor now, 40 years in the business. But I call it GARP or GARP, growth at a reasonable price. So it's great to buy a value stock, but if it's, it might have a 6% yield, but if it's going to have 6% yield this year, next year, and 20 years from now, that 6% won't be worth nearly as much in money terms.
no,
It'd be same money, but buying time terms will be much less. So I like to have growth and at a reasonable price. So I'm quite happy to accept maybe if we're talking dividends, and that's not the only criteria, but if we're talking dividends, maybe 4.5%, but
right,
with growth.
right,
So growth at a reasonable price. I mean, one of the things I used to do, this is what I used to do, and I'll tell you how I've changed it over recent years. I used to do what's called filtering of stocks. So I would take a country or an industry and filter all the stocks to find those which had the best P ratio, the best dividend, the lowest price to book, the lowest debt to equity, the highest cash flow. And you're looking for a combination. So you're giving a score to each of these parameters. Then you add up the scores and you see which has got the highest score. And, those are your buys. But I've adapted it more recently in the recent years. And the way I now do it, because it's easier to do it this way, is I take one of those parameters, let's say price earnings ratio,
right,
and I filter for a large group of companies, let's say 250 companies, which have got a price earnings ratio below 15, for example, or whatever figure I put on it. Then I do another filter. From those, I eliminate all those above a certain market cap or below a certain market cap. Then I do another filter. I eliminate all those who don't have a high cash flow relative to their earnings. And now I'm down to maybe 50 odd companies. I put those 50 companies into a list and I stop there. Then I'll look for another parameter. Let's say it's low low debt to equity ratio, and I'll produce another list of 150, and then I'll do another filter. I'll end up with a list of 50. Now I've got two lists of 50, and then I'll do a third one and a fourth one. I'd probably end up with multiple lists, 5 or 6 lists, merge them together, and I won't end up with 5 times 50 because some of them will have overlaps. So I'll probably end up with 150 companies, and then I start to score them now, and I eliminate the bottom tier, and I spend more time in the top tier. And then I'm looking for one of the fact filters I often put in at that stage is what's called momentum. I'm looking for stocks which, shortly after the last announced results, continued, or I'll say earnings call, because the earnings call is the
right,
key factor for me, continued to rise in price faster than the market. What that means is the good features I found about the company are believed by the market. In other
right,
words, now there's two ways of looking at that. You can say, I missed the boat because the market has gone up and people are already taking account of the good news. Or some people would say, I want to look for the companies which the market, which I think are great, have gone down because that means the market's missed it. But you're betting against the market. But if it's a good company and it's risen by 10%, it's still a good company. And
right,
if the price earnings ratio was acceptable before, it's still going to be acceptable if the share price is 10% higher. So I'm looking for positive momentum. And I'll gradually reduce that list down to much smaller lists. And then I start to pick and choose those companies. And that's when I throw them into the AI. And I say to the AI, it's quite a long prompt, it's maybe 49, 50 lines long. But amongst the things I'm looking for are the catalysts, what the people in the last earnings call. The earnings call is quite important because you don't get a transcript of that, but I know how to get a transcript of every earnings call. You In an earnings call, the directors are sitting down in a public meeting where the public, mostly analysts, ask them awkward questions like, "What are you
right,
doing about this? Why aren't you paying a dividend?" And
right,
you start to hear, or you might hear things where they slip up and let a word list. They might use the word "the" instead of the word "a." So, so for example, you'll probably be hearing about the dividend soon, as opposed to we are considering a dividend. It's subtle
Yeah.
differences which the AI can pick up for
Yeah.
you and feed you with, like Alice might say, how confident are you going to make this year's numbers? And the
Right.
guy will say, we're going to do it.
Right.
Now, if he says that, it means they're going to do better. They already
Right.
know.
Right.
So you can pick up. So I run that through the AI, and every year now I've been putting up on LinkedIn a specimen portfolio. In 2024, it was 55 stocks.
Hmm.
In 2025, it's 40 stocks. We're smashing every benchmark on the planet with those. We're
Awesome.
talking north of, as of today, I haven't got it in front of me, but in the mid 20s on all portfolios for the since the 1st of January, in the 40s for last year's portfolio. So the proof of the pudding's in the eating. That if you have a good methodology, it can be
Yeah.
made to work.
No, you're absolutely right, and the analysis that you're doing is phenomenal. You're taking all your years of experience and then plugging it into this technology, which is, it's beautiful. It's a beautiful thing.
Have you
So
had some great Have you had some great investments you want to tell us about? What was your
uh,
greatest investment?
well, recently, my wife worked for a large insurance company, or a bunch of different large insurance companies for about 37 years, and when the news came out about United Healthcare and their problems, starting back at the end of last year when that kid assassinated the CEO, the original CEO, the stock dropped. And then we knew that there were other underlying issues within the health insurance industry that was going to come out. And we just waited and waited. And then that stuff started to come out about they weren't paying people's claims. They had like the highest rate of not non-paying claims. So the stock dropped another like 30 or 40%. So if you put it on a chart and you go back 5 years, United Healthcare, was just doing this for like almost 5 years until it hit that spot and then started to come down. Well, it's already it was below its 5 year low in late January or February or whatever. And so we both said this is the right time to jump in. I think I paid like 260 or something for the stock. And within a few weeks, it already started moving back up. I don't know where it's at today, but it was at 318, I think, on Friday. So and it's not just a temporary thing. I think they're a well-run company and they're gonna work through their issues. But most of the analysts that follow United Healthcare for a long period of time said even if you take all those factors into account, the stock is worth 360 or 370 today. So it's going to get back there. Now, whether that takes a year or takes 6 months or takes 2 years, I don't really care. It's already got that 20% growth built into it, like you were saying. And so that was a really good trade that we made. And we went pretty heavy into it. I mean, more than I would a lot of my other stocks because I think it just was so undervalued. We'd be like buying, Apple at half its price or something.
You know,
So,
buying things when there's some news, and if you can crunch the numbers in a certain way yourself. I mean, I'm not
yes,
saying rely on other people.
right.
You got to be alone, truly
Yeah,
alone, crunching the numbers.
yeah,
I remember I could tell you dozens of stories, but just one example on Apple. I remember when they first brought out these AirPods. Um, Everyone was saying how daft they look and how stupid it was, and I thought, well, it's quite a good idea. So I went down to the Apple store. Sorry, maybe in 3 weeks. And I kept going. And you couldn't get any. They were
right.
always out of stock. And so I thought, what if 1 in 20 people who own an iPhone decide to buy what's called these stupid things you stick in the air,
Right, right.
because it seems an idiotic thing at the time.
Yes,
And so I did the maths. And I came to I said, now Apple makes 30% profit. And they're selling these things for 150 bucks or whatever it was, 200 bucks, I don't know.
right,
So I calculated 30% profit margin on that, added that to the profits of last year, and came up with a huge increase in Apple's profit. which meant that Apple, which was already on a acceptable PE ratio, appeared to be, if they would just sell one person in 20 an
Right.
AirPod, would be really cheap. And of course,
Right.
that worked out. That worked out brilliantly because
Yeah.
it was not one person in 20. It was like 19 out of 20 got the
I was
AirPods in
just
the
going
end.
to
And many,
say, and that doesn't even take into account that people drop them and lose them, and they got to go buy another one.
yeah, I can't even begin to tell you how many pairs I bought now. But when we had the global financial crisis, I managed to find companies with zero debt. But guess
Right.
what? Some of those companies had more cash on the balance sheet than their entire market cap, and they had a business.
Right.
When we went into the COVID pandemic, I found loads of companies. I didn't buy most of them, but we had hotel companies, we had cruise liner companies, we had airlines, hotel companies, restaurants, all at rock bottom as if they're going out of business. But there was
Right.
one which was very interesting, which I did buy, which was an advertising company. And the reason their share price had crashed to almost nothing was because one of their biggest customers was airports.
Wow.
They sold advertising on the
And
airports.
all the airports were shut down almost. Yeah, they were
Yeah,
just
yeah. So the question I had is, will the airports ever reopen or not?
right.
If the answer is yes, buying this thing for pennies on the pound was a good deal. And that was so I went into and actually when Russia invaded Ukraine, every company which had any assets in Russia was immediately sold down. Some of them, one or two of them, well, I found one. In fact, it was called. I tell you the name because it doesn't exist anymore. It was called J.P. Morgan Russian Securities PLC.
Wow.
It was an investment company investing mostly
Right.
in Russia. So they wrote all the Russian assets down to zero, but they still owned them. The share
Wow.
price crashed to a tenth of what it was, maybe less than that, about a 20th of what it was. Uh, and then, so that was a good buy. But after a while, people started to realize that they still had these Russian assets, even if they were valued at zero. And, you know, right now, you've got to just keep watching the news, look for stories, and then burrow down. Even today, I'm not going to say the name of the company because I don't want to be seen as a stock pusher here.
Right.
But I found this. It was a story popped across my radar screen. An investment company. This is a company which invests in lots of different things. Had sold one of its investments, and it sold it for a few billions, or hadn't sold the whole investment, had sold part of it. I thought, I wonder what that does to the NAV. So I did some number crunching, and I discovered that that company, which is trading around $15, will, after this sale, have an NAV of about $36, maybe $35. In other words, and by the way, it's got a very respectable dividend, a price earnings ratio well below 10, and it's got a 20-year track record of it raising the dividend every year and their profit and their NAV. But it's a dream. What's happened here is this is it's a very small investment company. It's only a billion or two,
Right.
so it's under the radar screen. But at the end of the day, something's happened. The brokers aren't analyzing it because it's not there. They don't look at companies that small.
Right.
But I've analyzed it and found that this nicely boosts the NAV, the net asset value of the company, to such an extent that the shares will, when it comes out of the next monthly report, will be trading at less than half what the NAV will be.
Wow. See,
So
that's
those
the
are the
beauty
opportunities.
of your that's the beauty of your genius.
Well, anyone can do it. All you have to do, don't read everything. All you have to do is
Right.
watch the news, which you can find out
Yes.
everywhere.
Yes.
On one of these websites, like the ones we talked about,
Yeah.
like Market Screener or Seeking Alpha, you'll see some news.
Right.
99% of the news, you move on.
Right.
But now and then you'll see something, you'll say, that's worthy of further investigation. If you do investigation, you might discover nothing.
Right.
But if you discover something, you're going to be truly alone. And if you're truly alone, you're getting yourself a bargain.
Absolutely. And to your point, there's in every sector of the economy, there's companies like this. It's not just like the hot sector. They're all over the place.
Yeah,
We're
I
back
mean,
to what we were saying earlier, which is, if you have a company who produces a very high quality service or product that most people can use, and you can buy that company at a discount and there's growth, That's a good story. It's a simple story, right? Don't overcomplicate the conversation,
Well,
right? It's
well,
like
let,
it works.
let me tell you something everybody can do. When the we started to have this flip-flop on the tariffs, or the unexpected tariffs, I suppose,
Right.
right at the beginning, I went to an AI tool and said, give me a list of companies which will be net beneficiaries of
Tariffs.
the tariffs are imposed on goods entering America.
Right.
And it came up with a couple, but one in particular I actually bought. And this company is a company which advises companies all around the world how to relocate their businesses, how to move their factories, how to move their staff. And not only that, the company had said, "I think this news from America will benefit us."
Right.
And even better, I'm in Switzerland. It was a Swiss company.
Ah!
So, so I
You're
bought
investing
that.
in your own country.
Yeah, so I bought that one. I only put a tiny amount into it, the one third I usually put in. So
Right.
it's not moving the needle. But we're up 20-30% now.
Beautiful thing. It just confirms your theory. That's all. Right.
So, but anybody can, when there's a bit of news, now you don't have to have
Yeah.
the idea yourself. Just ask AI, who's the beneficiary of this news I've just seen? There's
Right.
been, war started, there's been
Right.
a big order,
Right.
something new's happening. What's the beneficiary? There's always somebody there's always losers too.
Yep. Yep.
Mark, we're going to wind up now, but I just want to know, would you like to say anything else to the viewers and about investing and how they can pick stocks before we wind up?
Yeah, first I'd like to thank you for bringing me on, and this has been wonderful. I've learned a lot from you, and I hope the viewers have learned some things and can go back and review the video and pick things out here that may be helping them. I think you have to understand where you're at, right? Everyone's different, what your risk tolerances are, but you shouldn't look at investing as something that is too complicated for you to be involved in. And I think handing over decisions about all your hard-earned money to somebody, and in a lot of cases, people you don't even know, right? Because it's an advisory board or something. It doesn't make sense to me. You're not maximizing the potential of your money and your wealth over time when you do that. And if you break it, it just takes some time. There's some really good books out there that break it down simple for you to understand. Um, and listen to podcasts like this, and you have to take the time. You have to decide that you're going to put at least some time aside to try to understand these concepts, because if you don't, then whatever happens is going to just happen to you, and you're going to be, the results are going to be terrible,
Absolutely.
um
If you hand your money over to a third party professional investment manager like a big bank, a big broker, and so forth, they want to keep their jobs, so they're going to be buying what everybody else buys to stay in the pack. And my
exactly.
question is, do you really want to be part of the pack where you're Mr. Average? So when the stocks go down, they'll say it's not my fault, it's the market.
Yep.
Everybody suffered. And of
Yep.
course, everybody did suffer. Wouldn't it be much better to be in charge of your own destiny and knowing who's responsible for the rises and falls in stocks? And of course, if you can spend some time on it, and it's not a lot of time, AI can make things really fast. Then you can have an edge on these professionals
Exactly.
who they cannot buy the stuff you want to buy or you would buy because they're not in the pack.
No. And back to your original conversation about AI. I mean, if you don't take time to learn how to use it, you're not only going to lose your job, potentially, but you're going to lose the opportunity to have an edge in almost everything that you do in life, not just finances. And we could probably do a whole show just on AI. But to your point, it's never been easier. It's never been easier to understand these concepts. It's never been easier to invest your money wisely and keep track of your money. And so I would just say, put your foot in the water, put some money aside to just start the process. Maybe not all of it. I didn't jump in with both feet. It took me many decades to get to where I'm at, but you do it that way, and use these tools that are available. Many of, like you said, many are free. You don't have to pay anybody. You just need to invest yourself. You have to put time in. It's not going to happen by itself. So take the time, create a group, with other friends and family where you guys can talk about it, and get educated and keep coming back to Clive's channel because
Thank
he's
you,
got
Mark.
great content on there.
Well, Mark, this has been absolutely great. You've been a terribly interesting person. I really enjoyed it.
Yeah,
Thank you to
thank you.
all my viewers and listeners. I hope you'll give me a thumbs up and do subscribe. I've got many more videos coming on how to choose stocks. I'll be explaining words of one syllable for those who don't know anything about stocks, how to go about it. But even if you're an expert, you'll probably learn something from me. I've been doing it longer than most of you because I'm retired and you're not retired if you're a professional advisor. So maybe you'll learn something, and if you're not, just enjoy the video, but and show it to your kids. Thank you very much, everybody.
Thanks.